At the BRICS summit in South Africa last month, Brazilian President Lula da Silva called for the BRICS countries to adopt a common currency to reduce the dominance of the US dollar. Russian President Vladimir Putin said in a virtual address to the summit that the process of de-dollarization is irreversible and gaining pace. Chinese President Xi Jinping spoke at the summit of promoting the reform of the international financial and monetary system. How likely will we see the creation of a BRICS currency in the foreseeable future? If BRICS countries are not ready to give up their monetary independence, what about a BRICS currency that's backed by gold that does not replace their national currencies? What would it achieve? What is the only viable policy option on the table that nobody is talking about? Hi, I'm David Wu, a former IMF economist and Wall Street strategist with a 20-year track record of making actionable predictions about the big story shaping our world tomorrow. Robert Mundell, the winner of the Nobel Prize in Economics in 1999, will be remembered as one of the world's most influential economists, especially in the field of open economy macroeconomics. I had the great fortune to have studied with Mundell at Columbia University, where I did my PhD. And partly because of him, I began my career at the International Monetary Fund, where his work provided the intellectual foundation for much of the IMF's advice to member countries on fiscal and monetary policies in the era of capital account openness. Mundell made many contributions to economics, but his most well-known is on the optimal currency area. Mundell was called the father of the euro for a good reason. He was an early supporter of the European Economic and Monetary Union and pushed for the creation of the euro. His utopian vision was that of one big optimal currency area for the entire world, sharing a global currency. But even he admitted that political rivalries will make it difficult, if not impossible, for this to ever happen. Mundell passed away in 2021. What would he say about a BRICS currency if he were alive today? For the moment, let's assume we're talking about a real currency like the euro that everyone can buy and sell in the open market and pay for stuff in the countries that adopt the currency. As much as Mundell loved the idea of a currency bloc, he would be the first to acknowledge the important preconditions that will have to be met for a BRICS currency to succeed. In his well-known 1961 paper, Mundell set out 4 minimum conditions for an optimal currency area. 1, labor mobility across the member countries, so that when one member country is hit by unexpected negative economic shock, people of that country can move to member countries unaffected by the shock to look for work. 2, price and wage flexibility and capital mobility. Prices and wages across member countries should be allowed to adjust according to supply and demand conditions, so that markets clear quickly. Capital should be allowed to flow wherever it can achieve the best returns, with the most promising projects being financed first, regardless of location. 3, there should be a fiscal transfer mechanism in place, whereby when one country is hit by a negative shock, member countries unaffected by this shock would provide financial assistance. 4, the business cycles of the countries in the currency bloc should be more or less synchronized. The rationale is the need for minimizing differences, given there can only be one central bank and monetary policy has to be one size fits all. This may seem like a lot of preconditions, but they're all meant to compensate for the fact that when a group of countries decide to adopt a common currency, they're giving up the independence of their monetary policy. The above requirements are there to ensure that a member country does not exit the common currency at the first sign of economic difficulties. They are designed to deal with the risk of asymmetric shocks, meaning shocks that affect some member countries and not others at any given point in time. Even though the leaders of the BRICS countries would like to see the importance of the US dollar reduced, I suspect they realize that they're very far away from meeting any part of the preconditions for a common currency. Most of these countries barely enjoy full labor mobility within their own countries, let alone being able to access each other's labor markets. As much as BRICS leaders will lovey-dovey at the BRICS summit, I don't quite see South Africa or Brazil agreeing to send money to China should the Chinese economy be hit by an asymmetric shock. Will India be open to sending its savings to finance investments in South Africa and China? If there is one precondition that BRICS are closer to meeting, is synchronization of their business cycles. Since China is the biggest export destination for Brazil, Russia, and South Africa, the correlations between these countries are pretty high. However, this is not the case for India, the second largest economy in the group, that is trying to take market share from China in global manufacturing. The bottom line is that a future BRICS currency that will replace the current domestic currencies of BRICS is a very distant dream. Even if these countries can overcome the economic hurdles, the political hurdles will be so high that it is difficult to see the idea getting off the ground in the foreseeable future. What if BRICS countries aim a little lower and adopt a common currency while also keeping their domestic currencies? Is there a way for them to enjoy the best of both worlds? Unfortunately, when it comes to economics, there is no such thing as eating the cake and keeping it too. Let me explain why. Let's say tomorrow the BRICS countries adopt a currency that tracks their domestic currencies on a GDP-weighted basis. The currency can be issued by the BRICS Development Bank, a multilateral development bank established by BRICS in 2014. What would that achieve? It probably won't move the needle that much. First of all, technically, it wouldn't be too different from a Fidelity or BlackRock or any mutual fund launching a new exchange-traded fund that is invested in the currencies of these countries according to the relative size of their GDP. The price of the fund will move in line with the exchange rates of these countries. It is actually very easy to create such a synthetic currency. Indeed, if there were a real demand for it, one or several of these ETFs would have probably already existed. The fact that such an ETF does not exist yet, or that I'm not aware of it, probably means the demand is not too spectacular. Why would that be the case, you might ask? To answer this question, I have constructed a BRICS currency index that goes back to the beginning of 2018. For the country weights, I used the purchasing power parity-based GDP estimates from the IMF that I update at the start of every year. What this chart shows clearly is that if a BRICS currency had already existed, it would have performed poorly against the US dollar over the past 5 years. Even if we factor in the difference in interest rates between what these currencies were paying and what the dollar was paying, an investor will still be better off just sitting in US dollars. Don't get me wrong, I'm not suggesting that these currencies are not investable. Quite the contrary. Over the past 2 years, the Brazilian real has performed extremely well. The South African rand, a currency I cut my teeth on early in my career in the city of London, is one of the most traded currencies in the world. The happy reality is that investors can already gain exposure to these currencies and other BRICS currencies, including the ruble before the sanctions, via a variety of onshore and offshore instruments. What I'm trying to say is that it is not obvious having a synthetic BRICS currency would increase investors' demand for the assets of the BRICS countries. By the way, there are already ETFs linked to the performance of the BRICS stock market. I don't think it is unreasonable to say that a successful BRICS currency needs to be able to at least hold its value against the US dollar over time. But what we learned the past few years is that this is not a trivial goal. Some people have suggested that this can be accomplished by backing the BRICS currency with gold. This makes no sense whatsoever. Please let me explain. Let's say BRICS decide tomorrow to issue $200 billion worth of new BRICS currency and backs it with gold. Will backing the currency with gold mean that the currency can be exchanged for gold? If this is the case, then the value of the currency will just then track the price of gold as opposed to the value of the domestic currencies of the BRICS. If it cannot be exchanged for gold, then what would be the meaning of backing it with gold? In any event, we have to ask what exactly the BRICS would accomplish by creating what would be essentially just another gold derivative. The reality is that there's simply not enough gold in the world for a gold-backed BRICS currency that can achieve any kind of practical scale to challenge the dollar's hegemony. And let's keep in mind that the daily turnover of the US dollar is about $6 trillion. China, it's true, has been buying gold, but even China's total gold reserves are just at $135 billion. How much of its gold reserves is China willing to use to back a BRICS currency? If you think that having more gold backing a currency makes it stronger, then the more gold China allocates to the BRICS currency means that there's less gold backing the RMB, which, if we follow the logic, means a weaker RMB. Does that make any sense for Beijing? The bottom line, the BRICS can create a currency backed by gold, but its purpose will be purely symbolic. And if it's going to be just symbolic, then I don't want to waste my time thinking about it, and probably nor should you. The idea of a BRICS currency has gained momentum after the US and its allies decided to freeze Russia's foreign reserves sitting in their currencies. The decision by the US administration to weaponize the dollar is creating a need for a safe currency where countries fearful of falling foul of the US can park their reserves without having to worry about it being suspended or confiscated. But they can do this already by investing in each other's currencies. Indeed, it is probably safe to assume that the Russian central bank has already been rapidly diversifying its reserves into the RMB, the Indian rupee, the Brazilian real, and the South African rand. In other words, central banks don't need a new BRICS currency to reduce the share of US dollars in their reserve holdings. Put differently, the need for circumventing potential US sanctions is not a sufficient reason for a BRICS currency. It goes without saying that what they should do depends on what their objectives are. We can identify three general objectives from speeches and interviews with BRICS officials. 1. Reducing the US dollar hegemony. 2. Protecting against the US weaponizing the dollar against them. 3. Promoting economic integration of the bloc. It is important to realize that not all these objectives carry the same importance for all the current BRICS member countries, let alone the incoming ones. It seems to me that the only countries within BRICS that will be on the same page about all three objectives are Russia and China. Russia is already facing Western sanctions, and China knows it could be next if a conflict over Taiwan were to break out. Bilateral trade between Russia and China is booming, and the two economies have huge synergy across many areas that make further economic integration an obvious win-win for both. In joining forces, they have a much better chance to take on the US. Unless the 2024 US elections lead to a fundamental change in the direction of US foreign policy, I think there's a compelling case to be made for China and Russia to consider creating an economic and monetary union. The fact that they share a common border, their governance systems are not so dissimilar, both have low inflation and both run healthy current accounts, mean that such a union could be sustainable and beneficial to both countries. During the transition, the two countries can even adopt a currency like the EQ, the European Currency Unit, that was the predecessor of the euro that will be initially used only to price international financial transactions. Such a currency, which would exist alongside the RMB and the ruble, could also provide an anchor for the two countries to work towards policy and economic convergence before they decide whether to tie the knot or not. The policy coordination would be also much easier if it's just two countries. Eventually, if the experiment is successful, the two countries can consider enlarging the group by adding members that meet their economic criteria, much like the EU has done. In summary, a BRICS currency to replace all the domestic currencies of the BRICS members is unrealistic for both economic and political reasons. Adopting a BRICS currency alongside the domestic currencies of the BRIC members is not difficult to do, but will achieve very little of substance. A realistic alternative that could also bring out positive and substantial changes is a Chinese-Russian economic and monetary union. Certainly, in the struggle between the unipolar and the multipolar world, a successful monetary union between China and Russia could provide a big boost to the chances of the multipolar world. If you got something out of this program, please hit like and subscribe to my free YouTube channel. Let me know what you think by posting your comments on the video. If you want to learn more about my investment strategy, come visit us at davidwuunbound.com. Let me know what you think by posting your comments on the video. And if you haven't done so already, please subscribe to my YouTube channel so that you will receive a notification when the next video comes out. If you got something out of this program, please hit like and subscribe to my free YouTube channel. Let me know what you think by posting your comments on the video. If you want to learn more about my investment strategy, come visit us at davidwuunbound.com.